Good evening, guys. It is Wednesday, February 26th, 2025. This Bathrobe business. I'm Georgi Oganov. I got my decaf coffee and I got the news. So, a couple of things to report. It's kind of a strange market. So, let's start with gold prices, my favorite indicator. So, gold is slightly down. There's anticipation of PCE data. I always forget about this metric because honestly, I don't feel like it's that important. It's the personal consumer expenditures. So this is kind of like CPI because it's not based off of manufacturers, but in my opinion, less important. But that data is going to be coming out on Friday, so a lot of people are waiting to see what happens with inflation. I see no reason why it shouldn't be up. I think every indicator we've seen, we've always, I mean, let's be honest, inflation never went down. That's what I've reported on this channel day after day for the last 3 years, 2 years, I guess this channel has been around. Inflation has always been there. It's just a debate about how aggressive it's being. And this narrative that, oh, the Fed made progress, it didn't. All it did was slow the rate. But inflation still never hit the target of 2%. And when you look at it, the Fed's using manipulated data anyway. Inflation was always higher than what they were actually reporting. So I think inflation is going to be up again, especially with looming tariffs. There's no way it can't be. But we'll see what's reported. As we've talked about on this channel multiple times, inflation is just baked into the system now. That's what our system is operating on. Prices are going to go up one way or another. So just to buy assets because the value of those assets are going to go up. So we'll see what happens with that. First story I'm going to cover. This is where it gets interesting. Actually, I just noticed my screen wasn't sharing. There wasn't much to share on that first article. It was just about the price of gold, and it's currently sitting at about what is it, 29.15. All right. So next story, Nvidia. This is where it gets weird. So Nvidia reported a very strong quarter. Not too surprising. We kind of called it yesterday. But what's interesting is this article is different depending on which news source you go with. So CNBC is saying it's a fantastic quarter. Bloomberg is saying that it was a bad quarter. There's another article here from Fortune says it was an extraordinary quarter. And there was another article I came about that said it was a terrible quarter. So there's a lot of confusion as to what is actually happening with NVIDIA. So overall, it was a fantastic quarter. They beat earnings per share. They beat overall revenue. They're getting more money from their data centers. There's no way this quarter can be read as bad. However, there is a public sentiment now that is just the fact that their growth is going to be slowed, and growth is slightly slowing. So NVIDIA reported a 78% increase in sales from a year earlier and a 93% jump in data center revenue. But a lot of people are saying that growth is less aggressive than what we've seen in the past. However, you're still seeing 78% growth and a 93% jump in revenue, and more companies constantly piling into AI. So I still think NVIDIA is doing surprisingly even better than what I thought. I knew they would have a strong quarter, but I didn't anticipate anything this strong. Another, I think, little caveat here that people aren't considering is the fact that China is still buying NVIDIA, especially now that they're starting to ramp up their AIs just with DeepSeek coming into the market now. Now, they can't get the Blackwell chips, which is what NVIDIA mostly sells here in the United States, those high-end AI processing chips. They're not allowed to because of export controls. However, well, let's be honest, they still get them through Singapore. But even if they don't, on the public markets, they can buy chips that are less powerful, and that's exactly what they've been doing. So I think overall, NVIDIA is going to see strong growth into the next quarter, especially with China bolstering that pretty aggressively, because China moves very quickly and very aggressively whenever they move into a new market. Their electric cars went from 0 to 100 within a couple of years and have just become dominant in the world market. And I see no reason why AI shouldn't do the same. Next story. Let's talk a little bit about the inversion curve. So another little metric that shows that we might be headed for inflation. So there's something called the inverted yield curve, and that's essentially when the 10-year Treasury yield passes below the 3-month Treasury bond. Usually that's seen as a signal that the economy is turning negative. Now, this isn't a hard and fast rule. In fact, it's accurate almost every time. But about 2 years ago, it showed that this happened, and then no real recession came of it. So this isn't necessarily a true sign that we're headed towards recession. It could be a false positive. However, given everything else we're seeing, given some of the public sentiment, it's another little thing to add to the fire of we're headed towards recession. I think once we're through the first 100 days of the Trump administration, we actually have an idea of what's going on with these tariffs. The picture would be much more clear. If tomorrow the tariffs disappear like that, or if they're off the table, I think you'll see a bit of a rebound. But everything we've reported on this channel seems like they are going into place. They're in fact due to start with Canada and Mexico as soon as next, I think, Monday or Tuesday. So if those do come to fruition, I think that this could definitely mean that we're into full-blown, maybe not full-blown, but we're heading towards recession for sure. And this is just another one of those indicators that is kind of adding fuel to that flame. Another story I want to share with you guys is, well, let me jump over to, let me do an eBay first. So eBay is another one that's reporting kind of a mixed quarter. So overall, eBay had a very strong quarter. $1.25 per share earnings. Total earnings from the fourth quarter were $2.58 billion. Very strong, came in above market expectations. They were anticipating $1.20 per share and $2.57 billion, so they just crushed it. However, there's again a little bit of a tempered guidance. So for the subsequent quarter, ending in March, for the first quarter of Q1, eBay is predicting a total of $2.54 billion in revenue. However, the market analysis was expecting 2.59. So again, a sales quarter that is coming in below what the market is anticipating. Another one of these scenarios that we're seeing a slowing in the economy. Next story I'm going to cover real quick is going to be probably the last one. I'm not going to talk too much about Amazon. I was going to mention Amazon that they released an Alexa Plus. The only thing I think interesting about this is they finally found a good way to monetize Alexa services. I really don't see this going anywhere, but it's there if you want it. So it's essentially an intelligent AI device hooked up to the Alexa, so you can tell it, Alexa, buy this, Alexa, buy that. I don't know if people are going to use this that much, but it is a way that they can actually monetize their Echo in a way they haven't before. So I think it's good from a business standpoint. I don't think it's going to get that much use as much as Amazon anticipates. Last story I'm going to talk about is Nissan. So merger may be back on the table. So a while back, we reported that the merger between Nissan and Honda has fallen apart. However, one of the reasons it fell apart was because of the Nissan CEO being unwilling to essentially negotiate with Honda and become a subsidiary and abide by Honda's terms. Well, it looks like that Nissan is going to be replacing their CEO, so that merger could be back on the table, especially since Honda said they were open to merger if the CEO would succumb to their demands. This also comes at the same time as they got a major downgrade to junk bond status by Moody's. So they went down to BB negative. So you've heard of AAA rated. Well, this is triple B negative rated. So it's a junk bond. This is the kind of stuff you see in The Big Short where they package these things and sell them off. So it's doing very, very badly. They had another very disappointing quarter. Their sales were down. Let's see. I have it here in this article. Sales were down another, and now I can't find it. But again, another disappointing quarter. And they're having major crises with debt coming due next year. So they have to do something. So they're probably going to fire their CEO, and merger could be back on the table, especially with Mitsubishi potentially coming back in. This is really the only route they have to survive because currently they have nothing. That's pretty much it. So those are the stories of the day. I hope you guys found them interesting. I will be back here tomorrow. So I hope you guys have a fantastic Thursday, and I'll see you tomorrow evening. Bye.